Howdy, who all my stock market gamblers. Welcome today. I'm Tall Mike. I'm so glad you're here. Well, it's Friday. We made it to the end of the week. What do we got going on in the markets? Dow's up about 300, Nasdaq's up about 150. We're in rally mode. Look at, we broke through that 50-day on the S&P and we're off to the races, right? We're almost at 4,100, about 4,090 right now. I think we can hit that 4,100. I think next week we might even overshoot it a little bit, maybe get to 4,150. Now, I do think those February highs around 4,170, that's going to hold, but we're coming up and we're retesting those highs again. Now that's very common. A lot of times it's called a double top. You come up, retest it before you go lower. And I do think we're going to go lower. I think we're going to take out that October low down around 3,400. But right now we're going higher. Now why are we going higher? Well, they're printing money like crazy, right? You go on the Fed's website and they printed $500 billion in the last 2 weeks. Now, do you know that's on course if they continue at this pace? Then what would that be? That'd be $12 trillion a year. $12 trillion a year. That's what we're printing. Now, do you think that's going to bring down inflation or raise inflation? Look, they wave the white flag. They surrender. Inflation wins. All right, I get that because they got to save the banks. They got to save their friends. Their friends are in the banks. They can't let any bank fail. It's going to cost them. I don't think 12 trillion is going to be enough because they got to bail out the banks. They got to bail out the credit unions. Got to bail out all the brokerage firms. Got to bail out, they got to bail out the pensions. That'll be next, right? Insurance companies, they're all going to need bailouts because they're all doing the exact same thing, right? They have these toxic assets and these assets have gone down in value. It'd be like me and you buying a stock. Let's say we bought it at $100. It drops to $50. No problem. Just bring it back. Give it to the Fed. They'll give you your $100 back. Look, banks have got to stop gambling. The banks take your money and they gamble because it's encouraged. It's encouraged by the Fed. Don't worry if you lose the money gambling. We'll make your depositors whole. We'll just charge the taxpayers a little bit more money. So they're going to continue to print money. I get that. But I still think the market's going to come in. I think we're going to go down, retest that 3,400 level, and I think we'll even take that out. That's my take. Your take may be completely different. Your take may be that we keep going up forever. We can print money forever, right? We got a printing press. It's great. Let's get over to the real estate market. All right. Real estate market cracks me up. It cracks me up. These articles, they come out, right? And here was the latest one. Okay, mortgage applications are up 2%. 2% week over week, up 2%. Isn't that great? Well, how much are they down for the year over year? Oh, about 40%, but we're up 2%. This is a window of opportunity to get in. Hurry up, jump in. Look at these articles, what they doing, they're trying to juice the market. They're trying to juice the market, trying to get people to come in and buy homes. That's their goal. These must be written by realtors. Us realtors, it's always a great time to buy. Look at, they're trying to juice the markets with these terms, the terms that people don't really understand. So let me try to explain some of these terms to you. They come out and they say, pending home sales are up, right? Pending home sales. Are sales up? Well, no, sales aren't up, but pending home sales are up. Well, what's a pending home sale mean? It means someone put in an offer, but a lot of them aren't closing right now. In some areas, as much as 25% are falling out of escrow still. Why do they fall out of escrow? Well, because the person can't qualify for the loan. They thought they could, but they can't get the money to buy the house. So the house doesn't doesn't sell. It was pending, and then the transaction fell through. TFT is what realtors call it. Transaction fell through, and then the house starts over. It comes back on the marketplace again. But the pending home sales are up, right? Okay, so let's use pending numbers, not actual sales numbers, right? Okay, now other one that just cracks me up. I talked a little bit about this one last time. Anyways, the National Association, now they admit we're down. Real estate prices are down about 2% year over year, but they're down 13% if you start June till now, just in 8 months, down about 13%, fastest drop ever. But don't let that stop Redfin from telling you that the market's still going up, because we have asking prices year over year are still going up. They're up about 1%. Asking prices are up. All right, let's think about what is an asking price. Well, I could ask $20 million for my house if I wanted to. Maybe the house is only worth $1 million. That doesn't matter. I can ask 20 million. Does asking price really have anything to do with anything? No, it doesn't. A lot of people think that if you ask something, they will give it to you. No, it's what a willing buyer comes in and pays the willing seller. That's where the market is. That's what closes. Now, the seller, they're delusional right now. They can ask whatever they want. You can ask $100 million for your house that's worth $500,000. You can ask for it. You're not going to get it, but you can ask for it. So let's compare asking prices year over year instead of actual price. See, they try to juice the market with their terminology, right? All right, here's another good one. Okay, the article says that we've had an influx of pre-approvals. Now, this is for mortgages. We've had an influx of pre-approvals. Now, what does that mean? Well, what is a pre-approval? A pre-approval, look, I used to do loans. Anyways, when one of my clients would call me up and say they need a pre-approval, great, you're pre-approved. Oh, did you check anything? No, you don't have to check anything for a pre-approval. That just says to go out and start making offers. If you get an offer accepted, then we'll worry about getting you approved for real. But a pre-approval, that's like hitting a button, sends out the email automatically. You print the pre-approval. You go, here, seller, I'm pre-approved. Pre-approval means absolutely nothing, but there's been an influx of pre-approvals. Doesn't that make you want to jump into the housing market? Of course it does. You're going to miss the window of opportunity. This window of opportunity is going to go away. Look, we're at 6.5% right now. You can get a mortgage. It's a window. It's a window of opportunity. Hurry up. Jump in. The water's warm. Look, they're trying to juice the market any way they can right now. Don't buy into it. Market is not going up. Market is coming down at the fastest rate in recorded history. Of course, not in your area. Your area is still going up. All right. Now, what I want to talk today a little bit about is the ratio between household income and the price of the home. Okay, so let's say you make $100,000, right? All right, and the price of the home is $400,000. Now, that's a 4-to-1 income ratio, right? Okay, between the income you make and the price of the home. That's 4-to-1. Now, what's normal historically? Historically, it's around 3. They'll stretch you up to 3.5. Okay, so that's what you should base your purchase on. If you make $100,000, maybe you could stretch yourself to buy a $350,000 home. All right, well, in 2008, we all know we were in a bubble. And a lot of people don't think we're in a bubble right now, but we are. But in 2008, we were in a bubble, right? What was the income to the price of the home ratio in 2008? It was about 8 times. 8 times. Okay, and what happened to that bubble? Well, the bubble popped. It came in 34%. 34%, but they never let it fully crash. They started printing trillions and trillions of dollars, and they inflated the bubble even bigger. So what is the ratio now between income and the price of a home? Okay, it's 9 times. 9 times bigger than it was in 2008, right? And of course, the crash crash will be bigger, about 50%. And if you crash 50%, that won't even bring us down to where normal is. That bring it down to about 4.5 times. Like I say, you can stretch out on normal to about 3.5. But if you got 9 and you crash 50%, it would be down to about 4.5 times. But Mike, what if everybody's income doubles? Then it'd be right, wouldn't it? Well, okay, maybe. Yeah, you think incomes are going to double? I suppose they could. That's not what I'm betting on, but sure, we'll go with that. All right, but here's what's going on right now. So you got someone making $50,000 a year. They're buying 9 times that, okay? So making $50,000, they're going out. They're buying that $450,000 house. Well, this is not sustainable. It's not affordable. They're going to go into foreclosure. They're going to lose that property. And what we got right now in the credit markets are starting to lock up. Now, what really scares me is, well, the commercial mortgages. We talked a little bit about this, but the commercial mortgages really starting to lock up. Now, why is that? All right, well, let's say you got a tall office building or any office building. All right, let's say you paid $10 million for this office building. And now office buildings, they get a loan for about 85% of that. So an $8.5 million loan for this $10 million office building. Okay, well, what happened to the office building? Well, everybody's now on this work from home, right? So the office is about half empty. Well, what happened to the value of the office building? Went from 10 million down to about 7 million, lost about 30% already. Now it's going to lose a lot more, and I'll tell you why. Here's why. Well, that person has to go and get a new loan on that right now. See, it's not a 30-year mortgage that you get for office building. 3 or 5 years, right? And you have to refinance. So when he goes back into refinance, now the rates were at 3% when he bought it, but now they're at 7%. So he's going back into refinance this office bill and says he needs a new loan. And they tell him, well, rates went up. He goes, I can't afford that. And they go, well, that's no problem because we're not going to give you the loan anyways. I go, what do you mean you're not going to give me the loan? Well, your office building went from 10 million down to 7 million. You owe us 8.5 million. Now, if you give us another couple $1 million, we'll consider giving you a 7% loan. But they're not going to give them a loan because they have negative equity. Now, let's go back to the housing market. If you're in the housing market and you have negative equity, well, you can't refinance, number one. But nobody wants to refinance now anyways. But if you bought your house in the last year, 2 years, put 5% down, look at houses are already down 13%. You're underwater. You have negative equity. And when the credit market starts to freeze up, eventually somebody has to sell, right? They get divorced, they get job transfer, they die. Someone's house comes on the market for sale. But if no one can get the mortgage because the credit market's freezed up, you're going to have to find a cash buyer for that house. Now, that cash buyer, are they going to give you that 90% value? No. 80%? Probably not. 70? No. Down around 60, you might find a cash buyer. But your $1 million house now's gone down to 600,000. Now you go, but Mike, in my area, they're still going up. And that you live in a great area. I want to compliment you. But eventually this is going to hit all areas. But back to the commercial properties, this really makes me nervous because the credit market's freezing up. These are going to go on fire sale, bringing these banks down with it. We're going to have to print trillions and trillions of more money. But Mike, the FDIC's got them insured. Look, if the banks had to mark these properties down to their value, it's called mark to market. Mark the property down. It was 10 million. Now it's 7 million. If they had to do that, the FDIC can't even cover that. They don't have the money. The FDIC is broke. Look, they just bailed out Silicon Valley Bank, and they don't have money to bail out anybody else. That's where their friends were at. They gave their friends all the money. They weren't insured. But now the FDIC is trying to reload. Who are they trying to reload with? Your money, my money, the taxpayer money. That's who they want to pay. The other people that have their money in the banks that are insured, they want to raise the insurance rates for the other bank because they're the ones that are going to pay for these bailouts. Look, at bailouts are not a good thing. Bailouts have nothing to do with capitalism. In capitalism, you have winners and losers. The bad businesses go away. The strong businesses continue to thrive. That's what capitalism is today. Everybody gets a trophy. We can't have any corporations go out of business. We live in a corporatism society where corporations run the world and we can't let them fail. Look, at 20% of the S&P 500 are what's known as zombie companies. They can't even bring in enough money to pay their debt. They now have to refinance at these higher rates. 20% of companies will soon be going out of business. Look, is the stock market going to come down? Yeah, it's going to come down. Is it going to take the housing market down with it? Yeah, it's probably going to take the housing market down. That's just my take on this stuff. Didn't mean to depress anyone on a Friday. If you like this stuff, give me a thumbs up. Why not? I'm Tall Mike. Get out there, everybody. Have a great weekend. Bye-bye now.